do know why they're doing that now. And off we go. Thanks for tuning in again. I hope you watched the first episode and that didn't bore you to tears. We're trying something a little bit different this time. We've got, well, just some additional cameras that I'm going to use when I do eventually get in the aeroplanes, and also to overlay the SkyDemon tracking. So I've got that on my smartphone and screen record app on the smartphone that I'll then be able to use as a video and overlay part of that in subsequent flights. But I just wanted to test that out while I was in the car, and make use of the time and the cameras while I have them. What I did want to do in this episode was just to carry on really from the discussions centred around rental properties. We spoke about lettings relief, private residence relief, and the changes that will occur there in episode 1. From 2016, some other changes came in with regard to how you calculate your property income. So again, what used to happen is for furnished properties there was a wear and tear allowance, which was equivalent to 10% of the rents received, and that would be to be taken off your profits, and you'd get relief on that wear and tear allowance. That's changed now, and for all properties, whether they're furnished or not, you can claim for the replacement of domestic items. And HMRC seem to be quite keen on this and getting this right, obviously. In some cases it makes very little difference to them, in fact no difference to the tax that you pay if you put it in repairs and maintenance, for instance, but it does need to go into the right box on your self-assessment return and the property pages. So you can claim relief where you're replacing like for like domestic items. So if you've got a property and you've got white goods in there, washing machine, cooker, you would replace those items. That's not repairs and maintenance, that would be a replacement of a domestic item, so it goes in a different box on the self-assessment return. But importantly, it must be like for like. You can't put in a better specification of those items, or if you do, then your relief is restricted. So if you've got a refrigerator, let's say when it was the model that you got in is now £500, you could, if that needed replacing, you could replace it with the same specification of model there or thereabouts, £500, and you would get relief on that as replacement of domestic items. If you put in a better specification refrigerator and that cost you £750, let's say, well, you could only claim relief on £500, not the 750. So your relief would be restricted because there is an improvement in the assets in the property there, and that you would have to count for later if you came to dispose of the property. So if you're replacing white goods, carpets, blinds, things like that, domestic items, then those need to be categorised as replacement of domestic items, and you can claim relief on them as long as they are a like for like replacement of what was there originally. Now this is while the property is let out, and it must be a replacement of something that was existing. When you buy them new, that's part of the capital cost of the asset that you're renting out. So you can't claim relief for new items when you're getting a property ready for rental. That isn't replacement of a domestic item, it's not repairs and maintenance. These are items that are part of the capital cost of the asset that you'll subsequently be letting. So that's important to get that right, so you claim the right reliefs. Also important to keep a track of these items, because if you do come to dispose of the property, you need to claim as much as you can as part of the original cost, so that you don't overpay your capital gains tax. Another area that's coming to force from 2016, some changes that were announced and that are almost fully implemented now, are the rules surrounding interest relief. Now, I was going to say mortgage interest relief, but it's not just mortgage interest, it's about financial costs. So it does include mortgage interest, but if you took out a loan for some refurbishment, for fixtures, furniture, for a furnished property that you were going to let out, it includes interest on those loans as well. Those are part of the finance cost for which relief may be restricted. I think what's caused some confusion is the perception that you can't claim the mortgage interest now. That isn't true. You still need to record the finance costs of any loans and mortgage interests. What was being phased in was a restriction so that you could only benefit from relief of basic rate income tax. So in reality, the changes that have come into place, if you are a basic rate taxpayer, it will have absolutely no effect on you whatsoever. It will make no difference. You won't pay any more or less tax than you were before when it was being calculated in the previous way, where you would just offset the interest against your income. So I think that's a common misconception that everyone's going to miss out on, and you can't claim your mortgage interest. That's just not the case. It's just restricted to basic rate relief.
Thanks for watching. Drive safely, fly safely, and if you live in Manchester, remember, it's always sunny above the clouds.